Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition. Our focus is on the Q3 earnings of M&M Finance. Remember, the non-banking finance company has reported a 12% decline in its standalone net profit at 553 crore rupees for the December quarter of FY24 from 629 crores rupees in the same period last year. The company's total income has risen 20.7% to 3490 odd crore rupees, and that's on a year-on-year basis. The asset quality has improved both on the gross and the net stages as well on a sequential basis. The numbers are largely better than estimates of most of the analysts on the streets as well. And now to discuss the key insights from this quarter as well as the outlook going forward, I am now joined by the top management of the company. Mr. Ramesh Iyer joins in. He's the VC and MD at Mahindra Finance. Welcome, sir, and thank you so much for taking the time out for this discussion. After 2 quarters of reporting weak earnings, healthy earnings coming about in Q3, tell us really, what is the sense? Are the earnings as per your expectations? Do you also have room further to improve from here on in the next quarter as well?
So, when we put out our results in the last quarter, we had said very clearly where are we headed, what are the on-ground reality, and we were very confident that our NIMs would improve from where they were then. Our AUM would grow was our statement, and we also said that our GS3 numbers would come off, and all of this should lead to a better profitability. Just one kind of a comparative input, which is, it was compared to last year's third quarter profits and said there is a 12% degrowth. That's an absolute number comparison. But if you recall, last year's third quarter had a lot of provision reversals coming from a higher NPA that we were carrying during that period. Whereas the GS3 numbers are now well settled and therefore they are not truly comparable in nature. If it was to be adjusted for that, one would actually see a growth of about 20% on a profit. But clearly what gives us the confidence is the stability in the asset quality. The stage 2 numbers have remained where they are. Stage 3 has come down. The two together is below 10%, which means there is no forward flow happening. That's a real good news. And the other good news is the assets are growing. Amidst all competition out there, I think we are gaining market share in that market because of our penetration, our dealer relationship, OEM relationships, and all of that. And therefore, we do continue to believe with the buoyancy in the market, sentiment still positive in rural market, we are very confident that the growth would be maintained.
Okay, growth will be maintained. Could you also give us a little more granular detail on the NIMs as to what is the outlook going forward from here? It's improved sequentially from 6.5 to 6.8% odd, but from a year-on-year again basis, it is slightly lower. But where do we go from here over the next 2 or 3 quarters?
So in our expectation, when we put out the second quarter, we were expecting that by festival time, will the borrowing cost come off? Unfortunately, the borrowing costs have remained elevated, and therefore there was a pressure on the margins that was felt even in the earlier quarter when we discussed. But we did say that few clear actions that we have put in place, and we would see the 6.5 go to 6.8 before they go to 7% by March. And that's exactly what has happened. And the things that we've done, which has caused this increase of 30 bips, is one, of course, we've changed our product mix. We are doing little more of pre-owned vehicle, which comes at a better yield. We have also increased our lending rates for the new businesses. That adds to some NIMS improvement. And third is there is a fee-based income which comes from our existing customer through our cross-sell approaches and service provided to them. The three together adds up to a little increase in the NIMS going up to 6.8. In the same trajectory or direction, we would see by March, our first target is to go reach the 7%. But I think if it has to go anything above 7% in F25, our expectation is the borrowing cost has to come down in F25. And if that was to happen, and we don't know when and how much, but if that was to happen, one can expect further improvement over 7%.
Okay. Tell us also your own sense of disbursals. They've grown 7% year on year this time around. What's the outlook on that? As well as on your collection efficiency, sir, that's recorded at 95%, almost similar to Q3 FY23 and a marginal reduction over the last quarter. How would you really look at these two parameters?
In as far as disbursements are concerned, again, we just said we are gaining market share in some of the prime product. We are planning to add branches during the next 1 year additionally. That would help us much better.
Okay.
But I think we are relying also more growth coming from the pre-owned vehicle segment, which the demand is very, very high. There was a muted supply of second-hand vehicle in the market because normally the supply comes from repossessed vehicles of finance companies or exchange program run by dealers. The repossession stocks are low because the collections are good, and therefore there was no requirement really to repossess so many vehicles by the financials.
Okay.
Clearly, we do see that the exchange programs are doing well. That should improve the supply, and therefore pre-owned vehicle should do well. On the passenger car front, there is enough demand. In fact, some of the Mahindra vehicles, as you all know, is also in the waiting, and that will continue to help growth. So far as disbursements are concerned. In
Okay.
as far as collection efficiencies are concerned, I think 95% is a very healthy collection efficiency. And this year around, since the crop money did get a little delayed, otherwise we would have had another 1% improvement to that as well. But that would help in the fourth quarter, obviously, when the cash flows are improved. Overall, I think the collection efficiencies are holding up, and rural normally operates on three or four cash flows. One very clearly is the farm cash flow, two is the tourism, third is people movement, and fourth is the infra. And in all four fronts, we are seeing sufficient traction and activity happening, and that should enable better cash flow for the customers, which eventually will lead to better collections for financiers and also keep the GS3 numbers under check.
Okay. Sir, we are heading into FY25 pretty soon. Help us understand your outlook of FY25. Is it on track to be better than FY24? What are the top 2 or 3 growth levers that will put in additional growth for you in the new financial year?
So if you recall in FY22, when we closed March, we have put out a strategy document for FY25. And we had said few things that would happen by FY25. One of that was we had said that the AUM would double from FY22. We were around 60 odd thousand crore then, and we thought we'll go to about a lakh and 25,000. I think we are tracking well on that. We are close to 1 lakh crore already.
Yeah.
And we do expect that in the next year, with a growth of 15-20%, we should track towards that. In as far as NIMs are concerned, we had said it would be 7.5. We have restated that to be around 7.1, 7.2. We expect the rate drop to begin happen at least next year sometime. And if that was to happen, we would track 7.1, 7.2 on the NIMs as well. We had said on the GS3 numbers, we would be sub 6%. I think we are already 4% and below. We are tracking well on that. In as far as ROA is concerned, we had said 2.5%. We do believe that upward of 2%, close to 2.1, 2.2 is possible. So all those parameters that we had set out for ourselves for FY25 seems to be tracking well, except the NIMs where the borrowing cost is yet to come down. We thought it would happen by festival, but it didn't. But we do expect that in mid at least of FY25 should reflect that. And if that was to happen, we will cover up for some of the NIMs.
Okay, fair enough. Well, we are just one day ahead of the interim budget. So, sir, I have to ask you as to what is on top of your wish list from the budget this time around, even if it is a vote on account. We have seen past instances where, this government has sprung surprises and has announced quite a bit of announcements for various sectors. Your own sense, and what is your top ask from the finance minister this time?
I think, as a finance industry, we have been always talking about a refinancing body for finance companies.
Okay.
Because liquidity is the core to success of finance company, and finance companies have been contributing very well for the overall growth. We work with the segment of customers who need this credit. and we have been doing well as a finance industry. And therefore, the ask, I would say, not just for us as a Mahindra Finance, but as an industry, would be if we can get a refinance body which can, continuously provide the liquidity support to the finance companies. I think that would do wonders for finance company to contribute.
Okay, wonderful. And thanks a lot for sharing all these insights with all our viewers, sir. Always a pleasure to have you with us on Business Today TV. All the very best to you for the upcoming quarters. And here's hoping for more interactions to get more insights from you about the company and the industry at large.
Sure. Thank you so much.
Thank you. And with that, we wrap up this very special conversation with Mahindra Finance. Healthy set of numbers coming in. And of course, there is an outlook of sustained growth that could be seen going forward. And the assets, gross assets under check as well going forward from here. And the expectations from the upcoming interim budget. All of these conversations, I'm sure, are to help you really understand which way is the company really headed going forward directly from the top management's voice. And we will continue to get you such interesting conversations, so don't go anywhere and stay tuned with us on Business Today TV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.